Hello, everyone, and thank you so much for being here with us today. We have an incredible session with so many traders that are ready to share with you a lot of important information about trading. So, my turn, and it is going to be a very interesting presentation because it doesn't necessarily refer, I mean, it includes definitely the indicators that I love and I trade with every single day. But I do have another superpower that I'm adding to the indicators, and that is earning season. So, for those of you that are very new and do not know much about the market, every quarter, big companies report earnings and they have guidance. And we're going to talk in this presentation how these earnings are impacting price action. So, when it comes to favorite indicators, I have to say I have, and I'm going to be sharing my technical indicators here with you. You're going to see that there are very few indicators that I use. And I also use earning season as my power, my fuel, my power engine to fuel my price action. And of course, last but not least, price action is the only non-lagging indicator. And today I will be talking about exploiting earning season for maximum gains through futures. So, my name is Anka Metcalf, and I am the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and actively invest in any markets. I have been a professional independent trader for more than 20 years. And prior to becoming a professional independent trader, I have been in investment banking for more than 10 years. I run two super popular services. One is for swing trading, that definitely for stocks, and that is one of our oldest program since 2010. I've created this program and the futures trading room since 2017. And we do also offer trading education that backs the trading rooms. I specialize in high velocity trades. So a high velocity trade is a trade that um, finds its confluence momentum and confluence setup before before even institutions realize that that could be a buy point. And it's the let's say the velocity refers to how fast the trade is going to achieve target. And this all together with money management. Very strict money management when it comes to these trades. Now, these specific trades that I talk about, the velocity trades are applicable for swing trading and for investing as well, but they refer mostly to intraday because this is our income generating style of trading. Because if you don't have a source of income, like I did, so I needed to create a source of income for myself. So I dove into day trading, and day trading was able to fuel my swing trading. Day trading was able to fuel my long-term accounts, investing accounts, etc. I'm also the designer of an institutional proprietary trading system that is based on price support resistance, but my approach to support resistance is very similar to the ones that algorithms approach, and that is basically through 8 layers of price support resistance. So supply and demand only represents like literally 10% of the equation. I also specialize in specific trigger times because, hey, how many times have you found a trade, a perfect setup? You got in and it went a little bit higher for you, let's say if you were long, and then immediately after, you got stopped out. It was like, what? What happened? It was a perfect setup. It was, let's say, all support. So what happened? It wasn't at the proper time. So these are specific trigger times in the market, and these are proprietary to Trade Out Loud. You're not going to find them anywhere on the internet. And this comes from over 20 plus years of trading practice and experience, trading stocks, trading forex, trading futures, etc. I also specialize in specific price zones. Now, these are not proprietary to Trade Out Loud. These are institutional price zones, and they're only specific for price zones where institutions leg in or leg out. and chart synchronicity and divergency. And what a better example than today, where you had, if you're looking at the market, you had NASDAQ and you had the S&P that were incredibly strong, and you had Russell and the Dow that were weaker, right? So you had the divergency, right? So you had one strong or a group strong and a group weaker. All right. So if you guys want to, learn more about what we do, you could definitely head out to TradeOutLoud.com. You could follow us on Facebook, X, and on YouTube. So earnings season has a powerful impact on futures indices, especially on Nasdaq, the S&P, and the Dow. And these futures track the broader equity indices and react strongly to the earnings results of major index components. So here's what I plan on discussing with you guys today. We're going to talk a little bit about earnings season and what it represents and what it is and how that is going to impact the futures market, because we know how it impacts the stock market. What to expect this earnings season. We're going to talk a little bit about gaps. And I'm going to give you a really quick intro to futures and why it is so advantageous to trade futures through earnings, how to create a game plan for the current earnings season, because we have just kickstarted earnings season. We are basically in week 2, which is super powerful. And then stay tuned for next week, because we have the big power players. We have Apple, etc., Microsoft, Google that are going to report earnings, and that is definitely going to shake the market out. How to predetermine entry stops and targets using technical analysis, and how to trade stocks versus futures and minis. And how would you like to know the best times to execute trades during earnings season? Wouldn't that be fun? Would it be okay if I share all this with you guys? I think that'd be great. Okay, so earnings season already started. You guys know this is week 2. We had a soft launch into earnings season with JP Morgan, Citi that have reported earnings, and then we got into full throttle financials last week, and this week we actually have started a little bit more in depth, and we will have some tech companies that will report midweek. Well, earnings season means more market moves. The market becomes more volatile. So we're getting the return of volatility. We're getting velocity moves because we're getting bigger moves into the market, because earnings season fuels the move. And especially what we like when we see velocity, when we hear volatility, that means follow through. So follow through is basically the ease of the price achieving targets. So this is what our ultimate goal is, because it's okay if you have a setup, but what if you don't have follow through? You can have the setup and live in that trade forever. And that means bigger price swings. So for the really smart trader, the astute trader, that means more money, less time spent in front of the market, and also take advantage of institutional power moves that occur in the first hour of the New York trading session, because I specialize in the power hour. So, how earnings season impacts the futures indices? Well, there are some categories. Number one, futures react overnight. So, I'm pretty sure you know that futures are, basically open around 24 hours a day, 24/6 actually, because they open on Sunday night and they close on Friday. So when earnings from big techs come up like Microsoft, Apple, Amazon, or financials like JP Morgan, Bank of America, Goldman Sachs, these are released either after hours or before the market opens, and the futures respond instantly. So you don't need let's say the market to open at 9:30 in order to see the reaction, because you're going to be able to see the reaction at the market close. So more specifically, if you have, for example, a stock like Microsoft, or let's say Tesla, because Tesla's going to report this week, and Tesla's going to report on Thursday after the close, I believe. We're going to take a quick look and see. So because Tesla reports after the close, being a part of Nasdaq is definitely going to impact Nasdaq stock. A lot of traders are trading a Tesla, and definitely is going to give a print into Nasdaq. So if Tesla is going to have really good earnings, guess what? Nasdaq is probably going to follow through. So if this is going to happen in the post market, so after the market closes after 4 o'clock, because this is when they report, then you're going to observe the first reaction into the market around 8 or 9 or even 10 o'clock at night. You can potentially see the continuation pattern overnight and the impact you're going to have at the New York trading session open. And by the time the New York trading session open, you're going to get another batch of earnings that are going to impact. And if they're going to be in line with, let's say, with Tesla, with good earnings, and if you're going to have some stocks that are going to be part of NASDAQ that are going to be reporting, then the power play is already set. So you need to have a game plan for NASDAQ to go long, or the Qs if you're trading stocks. So again, positive earnings surprise. Obviously, futures is going to move up. A miss or weak guidance, that means now the futures are going to move down. Number two, the weight of the components truly matters. So NASDAQ is very sensitive to the Max 7. So in case you don't know what the Max 7 stocks are the stocks that have had a really great performance. Not necessarily last year, because last year was so and so, but the year before they were rocking. So we have Microsoft, Nvidia, Apple, Google, Amazon, Meta, and Tesla. Then the S&P 500, this is the broad-based impact, and these are going to be impacted by tech, financials, and healthcare. And I want to add something else here: energy sector. The S&P is rich in financials and energy before tech and healthcare. And then we have the Dow, which is moved by the blue chip. That means JP Morgan, Boeing, Home Depot, McDonald's. You saw Home Depot today with quite an impressive move, a little bit higher. And then three, we have the earnings beats versus forward guidance. This is very important to know. The actual EPS beat is less important than the forward guidance. So markets are looking are forward looking. So if earnings beats are but outlook if earnings beat but outlook is weak, the futures are going to sell off. So pay very close attention to forward guidance, because a lot of traders, even some that are trading stocks, do not pay attention to this. They go like, oh, okay, they beat the EPS. That means that the price is going to go up. No, it's the forward guidance. And oftentimes you're going to see a stock that reports has beat earnings and then is moving down. That's because of the forward guidance, which is more important than the EPS. All right, what you should be focused on as a futures trader, right? So you take all that information for you, and it's not that hard to compile everything. I'm going to show you exactly what you need to do. It's literally going to fit on a little post-it in order to be really, really up to speed when the market opens and be ready to cash in on those big profits. So key earnings days, you have to be aware on when these companies report. So focus on meta cap tech like Microsoft, Apple, Amazon, Google, Tesla, Meta, etc. These drive NASDAQ and the S&P. So when you have, strong earnings, strong forward guidance, these are the stocks that are really going to take the market higher. Weaker reaction into this, that's going to take the market lower. So bank earnings are going to impact the Dow and the S&P. Bank earnings. So we had last week a big batch of bank earnings. We're still going to get a big batch of bank earnings, and we're still going to have a lot of regional banks that are going to continue to report. These are going to have a high impact into the Dow and into the S&P. Track earnings before and after market, especially early in the season. So you don't have a lot of stocks that you're going to have on your watch because you don't have a lot of power players. So basically keep your eye on the Max 7, keep your eye on some of the major energy stocks, some financials. The reaction and not the news. Futures traders don't trade earnings. They trade the market's reaction. And just like with all the news that is out there, right? Because as a futures trader, you should not be trading the news. You should not be positioning for the news. You should trade the reaction to the news. Watch how NASDAQ and S&P behave in the pre-market reaction to earnings, and then you could form a game plan, plot some ranges, plot some levels, look for some setups, look for the trend and potential continuation. Ride the momentum depending on the volume and the structure. This is so important. So we've been talking about, the trend. You have to respect the trend, but also respect the reaction to these earnings because they can break the trend. All right, correlation to sectors and ETFs. So Qs and XLK, this is tech earnings influence. XLF bank earnings impact. So whenever you have like literally any kind of big financial company report, it's gonna literally be like it's going to have a huge impact. Use these as confluence tools for the trader. So not only that, you have your toolbox, right? So you need to be prepared because you can have like an indicator like a 20 simple moving average, or you could use volume, or you could use a Bollinger Bands or what have you, because there are tons of indicators. You have to see also what is likely to impact, because guess what? You know what news does? It's a interruption in the trend, and that interruption can literally potentially create massive profits for you. It could break the trend, right? So you have to be very mindful about the context. And I would say, like, as an indicator, the context, you like, don't trade in a bubble and say, oh, the price is pulling back to the 20 SMA, it does a rotation, it's in an uptrend, I'm going to take a long. Because if you have weak guidance on Tesla, if you're in Nasdaq long and the news comes out, guess what's going to happen? You're going to get stopped out. Okay, so this is the calendar for the month of July. And we're on the 22nd here today. This morning we had Coca-Cola that reported earnings. We've had RTX, Lockheed Martin reported earnings today. These were both down. And tomorrow we have the big day with Tesla and Alphabet that are going to report after the market close. IBM is going to report as well. So when you look at Tesla and Alphabet, which index do you guys think that is going to impact? Type it here in the room. What do you think? Who's going to impact? Tesla and Alphabet are part of what? Are part of what index? Who do you think is going to have a big major reaction tomorrow based on this? You can type in the trading room, in the trading room. You can type in the room here. Okay, NASDAQ, exactly, Renee. So NASDAQ is going to be impacted by Tesla and by Alphabet. Now, take a look. We have IWM here. Guess which index is going to be impacted by IWM? Do you guys know? Which index? Which index should be on your focus to capitalize on a potential momentum move in IWM? S&P, yeah, somewhat, but the Dow, remember the Dow only has 30 components under it, and IBM is a really big component. Okay, now let's take a look at the 24th. We have Intel here. Intel, part of NASDAQ, right? And so on. So you could see that even next week, take a look at this day right here. We have Meta and Microsoft that are going to report. This is going to be a powerhouse right here. Then we have Apple. Coinbase is big as well. So this is going to be a really fun day to trade as well. Visa, UPS, these two are going to impact the Dow. Meta, Microsoft obviously is going to impact NASDAQ. All right, so find out which it is. I'm going to share with you in a second how you can determine that with ease. So this is the earnings reporting by week. Guys, we are right here in week 2, and next week is going to be the big Apple, Microsoft, etc. that is going to take the market by storm. It's going to be the richest week in not in financials, I'm sorry, the richest week in earnings. This is it. So prep for that. Okay, and then we're going downhill because you see earnings season is divided by 6 weeks and 6 weeks, right? It's 6 weeks, six weeks in which we're going to have massive action. This is where we push the pedal to the metal, but we're very, very careful. This is where the majority of profits are being made. The last 6 weeks, take your foot off the pedal and see what the market offers you, because the market is going to respond more to the news side than the fundamental side. This right here is the fundamental side. This is the healthy part of the market. This is showing you the health of the company, the health of the industries, the health of the economy. This is it right here through these earnings, right? This is the fundamental side. The latter side, the last 6 weeks of earnings season, is the news side. And that's why you're going to get chop, 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 chop. Okay. Now, how to trade futures during earnings season? Well, avoid trading before big announcements. So if you have a company like Apple that is going to report, right, pre-market, for example, let's say let's say it reports at 7:30 in the morning, and you come to the computer, you're a newer trading session trader or a US trader, you're coming in front of the computer and you go like, oh, what a beautiful setup right here at 7:15. I'm going to take that stock long. And there comes Apple. And Apple disappoints, forward guidance is bad, and it takes the market down. And you're like, But what happened? Because I had like the most perfect setup. It was trending. It was above the 20 SMA. It was like I had a really nice risk to reward ratio. What happened? Well, this happened. Okay, newsflash. If you're, getting stopped out of trades, is probably because you're trading before the market opens, right? And you're not really paying attention to what's happening to the environment, to the context. So don't enter position blindly ahead of major earnings, Apple, Microsoft, etc. Wait for the dust to settle and trade the second wave reaction. That is coming into the New York trading session. So after the 9:30 open. Use the overnight session always, right? Take advantage of the overnight volatility in futures after major earnings releases and I'm going to show you here some examples how you can take advantage of that. And watch for overnight ranges and setups. This is key, but after. Number three, trade the indices with the most exposure. So obviously, if you have Apple and you have Meta that are reporting smashing earnings, of course you're not going to be trading the Dow, right? Or the S&P, right? You're not going to be trading the S&P. Newsflash for all the S&P traders out there, okay? No, you're not. Because there are some traders out there that think that the futures market is just the mini S&P. Newsflash, you're not a market maker. You have to trade what is in play that day. Super simple. So obviously that if you have Apple and Meta, you're going to be trading NASDAQ. So super simple, super simple math. And if JP Morgan is going to report earnings and if it surprises, obviously you're going to focus on YM. Why? Because it's a huge part of the Dow. Dow only has 30 stocks under it. The S&P has 500. So the S&P is going to be all over the place. Well, YM, if you have JP Morgan that is going to report positive earnings, it's going to fly like a rocket. Don't you want to be in the Dow that is going to fly like a rocket, or are you going to be in a ES and move like a turtle, right? Number four, you're going to map out technical zones. So mark pre-earnings high lows, right? Key moving averages and pivot levels, pivot highs, pivot lows, because they're going to represent your support resistance areas within the structure of the chart. Trade the reaction to these zones, not just the direction, right? Because you could have like a big move to the upside, right? Like a big, imagine like 5 bars going climactic in the stratosphere. Like moon is your indicator, right? Boom. And then you have your 20 simple moving average, let's say really far down. What do you think is going to happen at one point? The market and the price is going to come back down to test one of those moving averages because the price cannot stay extended for a long period of time away from its MAs, active MAs. And that's when you do a short squeeze. So it's fine to go against the trend if you see something like this. Apply the right strategy at the right time in the right context. And number five, use the 1 minute to the 15-minute charts. These are executional charts. Executional charts. These are charts where you should look for setups. You're not doing any analysis on these charts. No, they're there for one purpose, to get you in the trade, to see where your stop is, and to see where your target is. And if you don't see the target, move on to a higher time frame. These are execution. You don't do analysis on a 1 minute chart. There's no such thing. You look for a setup. 1 minute, 2 minute, 5 minute, 15 minute. From 9:30 to 11 a.m., these are the best time frames to use. And because we're talking about indicators, I use the 21 SMA, 10 EMA, and pivot points. And I also use the 200 SMA that you're going to see on the charts. And I also use a 50 SMA on higher time frames, daily charts, what have you. And that is my analytical time frame. That is the time frame that I analyze. The time frames that you analyze are the hourly, the 4 hour, the 30 minute at the most, and then the daily, weekly, and monthly. Pro tips. Watch the first 15-minute range. When the market opens, obviously, in your trading session, on the day of the major earnings reports, breakout, breakdown setups are highly probable around 9:45. I mean, hello, I just gave you what you need to look for and when you need to look for, so you don't waste money and you don't waste time. And I gave you the time frame that you need to watch it on. Track earnings sentiment across the week. If most beat, the market will rally regardless of individual misses. And cluster days, when multiple top names report, are volatile, trade lighter and tighter. We've had light and tight, right? We had light and tight last week until we made a little all-time high yesterday. Tools that we need to use. I use the earnings calendar sheet that I just showed you earlier, right? But you can use, if you want to dive into earnings without wasting time, I use Earnings Whisper. I love it. I follow it on Next. I highly recommend it. And I also use NASDAQ and FinFist for earnings. So, for example, if I want to know ahead of time when, I don't know, Adobe reports earnings, I go to finfist.com. Okay. If I want to find out what earnings are today or within this week, I'm going to Earnings Whisper. Volatility monitor, always monitor the VIX to see where it's at because it's so important. And look for setups in the VIX, just like you look and when you analyze the chart, the VIX is going to give you the same kind of information, whether it's in a buy and a sell or in a trend. Take a look at the WFC, this Wells Fargo report on July 15th. Take a look at this. Okay, bam, down, pre-market. The gray highlighted area is the pre-market. Gray highlight is pre-market. So this is after the market closed, and here it is before the market opened. This is where the market opened, continue lower. Okay, so you see this reaction? Okay, watch this. This is the S&P reaction. Down. You can see I don't have any highlight gray area here, but this is the pre-market. This is exactly the bar when Wells Fargo reported. This is the E-mini S&P. Okay, see the reaction? I'm going to go back. Down and down. Both of these charts are 1 hour charts. Okay, so before the market opened, the price was down. Guess what? This represents a good entry opportunity here, but we're not going to discuss setups today. Okay, I just want to show you the reaction. WFC reports, S&P down. Netflix, here's an example of Netflix. Netflix reported earnings here. It started plummeting, right? What does NASDAQ do? Plummeting, right? So you can see the reaction. So it's easier to find a setup and just follow it. I mean, you have the confirmation. This is your confirmation right here. Netflix is your confirmation. NASDAQ is your trade. This is what you're going to trade. IBM. Next week, IBM is going to report earnings. Newsflash. What do you guys think we should be watching? Do you think I'm going to be watching NASDAQ and playing NASDAQ that day? Nope. I'm going to be watching the Dow because I know where I need to shift my money to make money fast. Because I not only that I love to make money, but I love to make money fast. I don't want to be in a trade for a gazillion of hours. I just want to make my money fast. 15 minutes, 20 minutes, half an hour, done. That's my work day every single day. And that's how you love your life and you love what you do. Okay. So here it is. IBM reports earnings, IBM up, pulling back, stratosphere. Here it is. IBM earnings, pulling back and rallying. Now, Max 7 stocks, very few traders know that you can trade these stocks through futures and take full advantage of the big price swings. These are the Meta, the Amazon, the Apple, Google, Nvidia, Tesla, and Microsoft. So pay very close attention when they're reporting. And it's not hard. I told you where to go. You go on X and you follow Earnings Whisper. You find out what all these earnings are for free, fast. It only takes you probably like a nanosecond. Or maybe if you're a little slower, maybe 1 minute. But that's how fast you get access to the information. And you can see what stock is reporting earnings. Now, Dow stocks. These are market miners that every platform on the planet has. This is the Dow. 30 stocks under the Dow. This is S&P. Now, S&P, I couldn't fit here 500 stocks, but there are 500 stocks under the S&P. So this is Dow futures. This is the Dow. These are the Dow stocks. This is the S&P. You can see the stocks right here. They're in alphabetical order. And of course, there are 500, not just these. And they represent the mini S&P. NASDAQ. There are 100 stocks under NASDAQ. Okay. I couldn't fit them all in here, but you get the picture. And these represent the NASDAQ futures. And Russell, there are 2,000 of them. But guess what? You have RTY futures. You can scan through them and find out. These are not really likely to impact the market as much as these three right here. So you bet that when a stock under Dow like IBM or Walmart or Home Depot is going to report earnings, that's going to be a big deal for the Dow. So I know that if I have IBM earnings, I'm not going to be trading NASDAQ because the money is going to be shifting here. Why? Because the institutional money flow. Institutional traders, they're going to be trading IBM. So institutional traders are going to go to Dow futures. Super simple. All right. Let me know if you find this information helpful, team. Let me know. So bottom line is that you need to sync your stocks under the index. That's the key. That's the secret. That's the secret sauce. Okay. So this is an example here of all the stocks. This is finviz.com. I usually take a look at this, around, I would say around 9:45 to 10 o'clock, right before the last trigger time in the market, which is 10:30. And I kind of see what's leading and what's lagging. And if I see the healthcare lagging, it means that there's trouble in paradise. So that means that there's trouble in ES. So that means that ES may not have as great a follow through as NASDAQ, right? Look, Microsoft, Nvidia, Apple, etc., right? So these are going to run much higher, faster than the S&P. So I'm going to focus on NASDAQ rather than ES. All right, checklist. Get pen to paper. This is what you need to do exactly. Check the earnings before the market opens and after the market closes and historical time to release the report. If you don't want to do this work, CNBC is going to do it for you. So just tune in to CNBC and you're going to find all this information. Number two, trace your levels and plan your trade. So again, what you need to do is look at the chart, see the structure. Is it in an uptrend? Is it in a downtrend? What is the price action reaction within the last 15 minutes? What is the price action reaction within the last hour? What is the price action reaction on the daily chart? Is it trading above the prior high? Is it trading below the prior low? Where is it trading? Is it trading above the MAs, below the MAs? Where is it trading? And based on that, you can develop your plan. Trade and watch NASDAQ if NASDAQ stocks report. Trade and watch the Dow if the Dow stocks report. Best time to execute trades: before the market opens or after the market closes. Okay, but like I said, there's a quick disclaimer here. I would suggest you watch the market around 9 p.m., after 9 p.m. That is when the 4-hour chart closes. So you need that confirmation to see the direction and to see how it closes. Because if it closes strong and it's into a setup, the likelihood of the price continuation higher is really high, and the other way around. Now, before the market open, you need to watch the market and see how it trades. Sometimes you're going to get trades ahead of the market open, because if Apple's going to report, it's not going to wait for the open. The futures traders are going to be the first to react, and that's why you're going to see a big gap up in Apple, because they're buying it pre-market. So therefore, NASDAQ, you could trade it pre-market. How to prep? Well, you need to know when certain stocks of interest report and have a good understanding of prior earnings behavior of the correlated stock that you will be trading via the corresponding futures index. And of course, again, track your levels and plot your trade, just like I said before. Netflix here reported after the market closed, and you could see a big push to the upside, sideways in the overnight, and when the market opened, it continued higher. But the reaction was here. Take a look at what happened in NASDAQ. The market pushed higher, breaking all this range, all this resistance, continued a little bit higher, and finally the breakout came in. Guess when? 3 o'clock. Why? London session. Why London session? Because that is when a little bit more volume comes into the market. That's when the algorithms react. There are no algos in the Asian session. Newsflash: too slow, too shallow, and not a lot of volume. That's why algos only live London session, New York trading session. So here's the big breakout that happened. So yes, you can take advantage of that. If you're an overnight trader, if you're living in Europe, you can take advantage of earnings because they have the tendency to set up around 3 a.m. or set a buy limit order above the base, because you could do that. You could do that. This candle is around 8 o'clock, 9 o'clock. So if you see here this base, of course you're going to take it. This is an AON trade. It's called an AON trade. All or nothing. You take these with half the size. Why? Because you go to bed. You're not going to watch it. Okay? So you place your limit order buy, you place your stop, and you place several targets. Here we go. Boom. To the upside. By the time By the time the New York trading session traders wake up, you're in massive profits. You're in 100 plus point profit here. And then you let it ride. You trail it accordingly to your plan. Here's another example. And here we have Netflix down and we have NASDAQ down. So you can see how easy it is to trade knowing what to trade, when to trade, and how to trade. Here is the pure example of institutional money flow. And this is an example when Google, Amazon, and Microsoft reported on the same day after the close. And you can see here a big push to the upside. Ta-da! In Google, big push in Amazon, big push in Microsoft. What do you think NASDAQ is going to do? It already had the first initial reaction. The market was closed, right? So they reported right after the market closed. They popped up. So you either get it here right after the market closes, right? Or you get it above the range here. So you have that opportunity to get it. You have multiple opportunities. This is the Asian session, right? So what happens in the Asian session, team? Nothing, really. Okay. So the London session traders are back at their desks and bam, bam, take a look at this. And by the way, you can take an advantage again, put a limit order, stop, targets. By the time you wake up, you're in profits or you stop out. This is the reason why you take it with half the size. This is the one trade. All right, let's take a look at here. This is an interesting day because it was heavily divergent. So here we have the Dow 15-minute, NASDAQ 5-minute here. So you can see here that Walmart, so I have 15 with 15 and I have 5 with 5. So I have YM, this is the Dow, mini, and with Walmart. So this is a second layer of the second layer of confidence, if you will, confirmation and confidence. Like you can't get this anywhere else, right? So Walmart reported earnings skyrocketing. What do you think the Dow is doing? Moving higher, obviously. It can't go lower, right? And then what happened here? Apple down, reported bad earnings, right? Bad guidance. What does NASDAQ do? Down. Guys, this is the same day. Same day. Okay? Same day. So NASDAQ down, Dow up. So know how to check because you go like, oh, I wonder why YM is up and NASDAQ is down. Like, why is that? Okay, well, here it is. All right, so what to look for? This is the final wrap. You need to look at the trend, determine directional bias, uptrend, downtrend, support resistance levels, the areas. What are the areas that are prone for the price to pull back into or to go into? Time frames need to be in sync. So for example, like here, if you're watching a 15-minute Dow, you have to watch 15-minute Walmart. If you're watching a 5-minute Apple, you need to watch 5-minute NASDAQ to correlate. You need that correlation. You need to plot your ESTR. This is your entry, your stop, your target, and your risk. Your risk. You know, David was talking earlier that we should do like another event with risk management, about risk management. Yeah, that's a big deal. That's the first thing that you need to learn as a trader, not candlesticks, not setups, not trends, nothing. You need to learn risk management first. Okay, so plot your ESTR. Number 4, try to determine the entry based on the chart time frame that is providing you with the most information, meaning where the setups are forming. Because sometimes you look at the 2-minute and it's so super crappy, you need to zoom out. Then you can see a bigger picture. Oh, okay, that's a nice setup on the 5-minute. Oh, but that's a better setup on the 15-minute. So always navigate to the time frame where you identify the setup because trading is visual memory, right? Your brain is going to remember a really good quality setup, okay? And it remembers really bad setups as well. That's why it's preventing you from getting in bad trades. So try to determine the entry based on the chart time frame that is providing you with the most information, where the setup is forming. Try to eliminate the noise. And then number 5, define your entry based on your strategy. Place stops, very important. And then wait for the trigger to happen. Dennis is asking, what the heck is a trailing method? Is this for real or a joke? Like, seriously. A trailing method is when you're in a trade, you need to have a trailing method in place to know when you're going to lift your stop, where you're going to take profits, et cetera, et cetera, et cetera. Okay. And then have a trailing method ready to apply. Ready to apply. You need to do that. So I'm planning to get into my trade, right? If you don't have a trailing method, shut everything down and try to find out somewhere on the World Wide Web how to trail because you need a trailing system. There are multiple trailing systems. I actually use three, but we're not going to get into this because I still have a lot of presentation to go through. But you need to have a plan like when the trade moves, okay, and it starts moving in your favor, you need to know exactly where's my target one and what is your reaction to target one. Are you going to take out half, a quarter? What's your game plan? And then when the price is there, ask yourself, is it extended enough from the entry to start lifting my stop up in case you're in a long? And you're going to look for a technical level where you need to lift your stop up. So knowing all this is going to offer you peace of mind. So bottom line is that I have a very special offer for you guys for the Futures Trading Room. And here's what you're going to get when you're going to join. First off, I'm going to do all the work for you. This is a hand-holding system. I believe that traders need a lot of hand-holding once they start trading. And I had that, and that helped me propel to where I am right now super fast, super fast. So you need to hire somebody that will get you from point A to point B fast. And this is what I'm doing with my students, okay, in my classes. But this is just the trading room. So if you have knowledge of futures trading, okay, because you can't just go like, oh my gosh, what's an entry? And I'm going in the trading room as like, oh, I see a candle, I see a green candle is flickering in front of me. I'm just going to get into trading. You need to know at least a little bit about trading, okay? So here's what you're going to get. Live market prep and trade calls. So I do the pre-market game plan. The room opens at 9 o'clock. I usually come on the mic around 9:15 to 9:20. Why? Well, because I need to look at price action. Still look at earnings because remember, the stock market opens at 9:30, right? The futures market, trading session opens at 9:30. So I need to watch from 9 o'clock as close as possible to 9:30 to see what the reaction to the earnings are. So I know how to trade at the open. So I know what trades I need to take and what I need to share with everybody else. So know exactly what to trade and where the start money is flowing. Okay, so we need to know exactly where the money is flowing before we get into the trade. So this is my work before the market even opens. Real-time trade execution and management. So watch the trades unfold live with exact entry stops, targets, and position and management explained. Moreover, so not only that I'm doing the trailing for you, so I'm giving you the trade on a silver platter. Here's the entry, here's the stop. I walk you through the trade. So I explain the setup, I explain the context, I explain everything, and then I tell you, okay, I'm going to get in this trade. This is where I'm going to get it. And guess what? I'm not going to say, oh, get it now, get it now, get it now. No, it's a buy limit order. So the order comes ahead, right? So first we look at the level, we post our limit order, and then we wait for the limit order to get filled because we want it at an exact desired price. Then we place our stops. And then we watch the price action. And based on price action, we are trailing. We're not going to let the price action or like, oh my God, we're up. Oh, I need to get out because you're not used to having profits. And all the time, traders that don't know how to trail, they go like, oh my God, what do I do? What do I do? What do I do? Well, this is what you do. You need to have a plan in place. And I am sharing my plan where to take partial profits. If you want to take partial profits, I'm telling you exactly where these areas are. I'm telling you what I'm doing because everybody has a different risk tolerance. Maybe I don't want to take partial profits. Maybe you want to take partial profits. Maybe you want different goals. Maybe you're trading a prop account and you want to get a live fast or you want to get your check by Friday. Okay. All right. So real-time trade execution, in-depth coaching, and skill drills. So yesterday we had a lecture about position sizing and risk management. If you know this, you can lose on 60% of your trades, but as long as 40% of your trades are winners, you're going to grow your account. So this is how important this information was. And then on Monday, Friday coverage, because consistent results require consistent execution, pro level strategies in a structured system built on institutional principles, simplified for retail traders. And I do have a special offer for you guys. Like, if you guys know me, we never do special offers because when you buy, for example, a Birkin, you don't get a discount. Okay. This trading room is like a Birkin. Okay. So few traders know that if you need to reach consistency, you need to have great education, which you need to have in the market. I mean, you're trading either with or against the most brilliant minds in the market. Okay. So if you're like a trader that didn't put the effort in to learn how to trade, how do you expect to make money? And you need a support system, somebody that is going to keep you on track to grow your account, to keep you constantly in the right system so you can reach your full potential. So you got to ask yourself, what kind of trader are you? Are you like a welfare trader? Are you that not successful trader, always blaming everybody else for not having success in trading, saying, trading doesn't work, trading doesn't do this. Just because you don't know how to trade doesn't mean that trading isn't successful. It's very successful for other traders that are making a killing in the market. If you're the eternal student, never committing, you're still in that welfare mentality. Okay, never committing, like webinar after webinar, strategy after strategy, system after system, never committing to one thing and testing it out for yourself. Or are you the millionaire mindset trader, success set for success, where you're like, I'm determined, I'm going to do this. Set your goal. When are you going to do this? Do it now, right? So a minimum investment in yourself can start producing results, and it's a starting point for you. So don't procrastinate because procrastination is the assassination of the motivation that will stop you from reaching your destination. Your success isn't optional, it's engineered. So you need to manufacture your success. The futures trading room is for you. It's not for everybody. I got to tell you, it's not for everybody. If you're losing money in the market, and first of all, you need to be coachable. Okay. You need to be coachable because if you're not coachable and coming with bad trading habits and say, kind of like, I'm not going to do that because I know how to do this. Well, do whatever works for you, but you don't belong here. Okay. But if you're losing in the money and if you're coachable, this room is for you. If you don't have a system, this room is for you. If you don't have a process that eliminates emotions, this room is for you. If you lack confidence, this room is for you. If you're stressed out and think like, oh my gosh, trading is not working. I really, gave it all my time and do this and that, but it's so stressful for me. You're doing it all wrong because trading is so boring. It's never stressful. I don't know how anybody can say, oh, trading is so stressful. It's not. It's boring. Okay. If you don't have a trading plan, like stop everything right now and start looking into your trading and start developing one. If you don't have a clue how to achieve consistency, this trading is for you. And by the way, last week, guess what? I gave my traders in the trading room the secret sauce of the trading plan. My trading plan. My trading plan. Who does that? I don't know anybody else that does it. If you need guidance, if you need all your questions answered, this room is for you. So ask yourself this. You don't have to type it in the room. How much money did you lose? How much money did you lose last year? How much money did you lose these 6 months, 7 months, six and a half months? How much money did you lose that? Um, what is your account saying about you today? How did you trade today? Did you make money today? Did you stop out today? Because capital speaks. So the Power Income Futures Trading Room Kickstart Going to get you in the room. Our room price is $299 a month because it offers you tremendous value, like tremendous value. We have traders that are in the room with us since 2017. Since 2017. So I'm going to give you guys $100 off the first month. I'm going to give you guys $100 off the first month. So you're just going to pay $199, and then the price is going to go back to $299. If you want to take advantage of the special offer that is literally, the deadline is on Friday night, this is it. So let's see if I can post it in here in the chat box. This for the trading room. Bam. All right. So again, take advantage of this. And futures live trading room. This is what you get. 100% guided trading, real time, precise trading. 1, 2, 3 trades a day, exact trade parameters, entry stops, targets, live trading for the life of the trade, real-time response to all your questions, live screen share lectures, and mentoring. So $199 for the first month, then $299 a month. I mean, think about it. This is $199 a month. That is $6.66 a day. 199 divided by 30, $6.63. That's how much money you need to make per day in order to be in the trading room. Okay, seriously. Okay. Now, I want to share something with you. If you go to our website, you're not going to get that price, so you have to take advantage of that link that I just shared with you. And if you want more information about the trading room, you could actually come in here to the TradeOutLoud website, but I'm not going to post it in here because you're not going to get the same deal. But if you want to learn more about if you want to learn more about the program here, you're going to have access to the performance portfolio. These are the 3 trades that we did today, by the way. So we had one, a break even, capital preservation. We had one trade here, a second trade here. And again, we put our stops. And by the way, this trade here achieved this target as well. Okay. So if you wanted to take partial profits, you could have made a lot more money. This is per contract. Okay. So this is per contract. Okay. Just want to show you real quick. We provide you with a risk calculator. You tap in here. So risk management is number 1. You get the roll dates, option expiration, holidays. You get a lot of information. Plus you get access to our private X feed where only our members have access to. And by the way, here, I just wanted to show you real quick. Okay. So here it is, silver. And this is the date. Bam, bam. All right. July 17, 3:46 p.m. This is outside of the trading room hours. Whenever something is setting up, I post here. Don't post all the time in here, but this is just a backup of the trading room. Okay. So take a look. You see the setup right here? I mean, you could cry. You could cry. See the setup right here, $38.29. You want to see it now? All right, let me just go. Silver. This is the setup right here, same setup. This move right here could have made your quarter. Okay, so this is the performance portfolio here. I just want to share you some of the trades. By the way, NASDAQ here is a swing. We have GC here. Okay, look at gold. Look at gold. We called gold on July 11th, July 22nd. Do you guys see how it's moving? Look at gold right here, ready to explode. This is where we got in. July 11th. We know how to get in. And by the way, gold, we could actually be in Bora Bora right now. I'm actually considering like maybe trading a few more months and then taking the rest of the year off because we made our profits. We're done. Like we don't need to be in the room every day. Okay. So again, guys, if you want to take advantage, this is the link. If you have any other questions, feel free to ask. Very excited to see you guys in the trading room tomorrow. Thanks so much, David.